For a conversation on the state of our markets and our economy, please welcome the president of the New York Stock Exchange, Stacey Cunningham. Atlantic senior editor Gillian White is here to lead the conversation.
So, Stacey, when people talk about the stock market, when they talk about exchanges, and then when they talk about the economy, sometimes I feel like they're conflating a lot of different things. So what do you see as the role of the exchange in the larger market and in the health of the economy?
You know, I think if you look at the role of the exchange, and especially the New York Stock Exchange, which has a 226-year-old history, our core mission is the same. It's been to help companies raise money so they can go out and change the world, and to provide opportunities for investors to share in their success. And I think a lot of times when people talk about Wall Street and finance and a lot of the topics that surround that industry, there's often a view of that there's a negative thing. And I think you should take a step back and realize it's really what's driven the growth in our economy, not just here in the US, but globally, because that framework allows for not just making the rich richer, but allowing dreamers and entrepreneurs to scale their products and services and make them available to the masses, not just the few with means. So we're very proud of the small part we play in that process in allowing the people to raise money so that they can scale their services and make them widely available.
Yeah. So a few weeks ago, we saw what has been kind of the most significant market drop in the past few years. And people really struggle, I think, to make sense of what that means. So I'm wondering if you can help us make sense of what a drop like that means. How do we contextualize it?
Sure. First of all, I would take putting into context. So the market has been so strong for so long that market drop was actually not that significant on a percentage basis. So the numbers look big, and people take a step back and think, oh my goodness, like what is going on here? The market is falling, 600 points in a day. But on a percentage basis, it wasn't even a top 20 market sell-off. And the market has had such a strong upward trajectory, up over 300%. So I think it's quite natural to have some pullbacks. The market's never going to go up indefinitely. And so it's not, I think we just need to put that into context when we see pull back a little bit.
Yeah. So one of the things that I think about a lot as a reporter is the return of something that we didn't see for many years, which is volatility, which used to be somewhat normal. I'm wondering if you're at all concerned about the return of volatility to the markets, and also if you're concerned about the volatility that conversations around things like trade and rising interest rates can bring.
So I was more concerned about the lack of volatility, and I know that sounds odd, and you certainly want everyone to have a high level of confidence when they're interacting with the market, but it was very unusual for an extended period of time for the market not to react to some of the things that were going on globally, and uncertainty is never really comfortable for investors. So when we looked at 2016, there was certainly a lot of confusion around what the future might look like when the UK had the Brexit referendum and the US presidential election, were all things that we thought were going to contribute to more volatility going into 2017. And it was really surprising to see the market did not react in an overwhelming way at all to what was going on globally. So this kind of feels more normal. There are a lot of things that the market's reacting to, whether they're trade issues or just global uncertainty. This is normally how markets respond when there is an uncertainty out there in the global landscape.
Yeah, President Trump has been more vocal about the markets and kind of claimed credit or dispelled credit for things that the market does. He's been a lot more vocal than previous presidents. He's talked about the Fed and its decisions. Is that something that concerns you, or something that you think kind of gets figured out in the markets by itself?
Well, I mean, the underlying economy is strong, right? And we certainly did see the market react to the tax reform and how corporations have been able to invest in their employees. And I think sometimes getting back to that negative view perspective, you often hear, well, that only helps corporations or that things are skewed. I think it's important to understand that when companies are doing well, they're able to create jobs and scale their businesses. Just looking at the companies that are listed on the New York Stock Exchange, they employ 45 million people. So when they're in a better financial place, they're able to scale their businesses and hire more people. So I think that the fact that the underlying economy is strong, and some of that is based on some of the steps that have been taken through tax reform and others. So I think we just need to recognize that that's a positive impact on corporate economy and in turn on Americans.
I want to stick on the idea of actual jobs related to the exchange. Human traders have really gone away by and large in most places. I'm wondering, do you think in 5 years all of those jobs will be automated?
No, I don't. In fact, when you're 226 years old, you don't get to stay around unless you're reinventing yourself. And so when I look at how the future of jobs has changed already in our environment at the New York Stock Exchange, not on the trading floor. I mean, we're really the only U.S. equity trading floor that's still out there. And so that job has changed, right? So, but people write technology, and then technology empowers people to be more successful in what they're doing. So the traders on the floor are now using technology to scale what they're able to provide and focus their energy on the moments that are most critical to apply human judgment. And I started my career on the trading floor. So when I was down there, I was a market maker. I couldn't process the 50 billion messages a day that we process today. So we had to change, right? We had to catch up with what was going on in investor demand in trading. So now today, those traders on the floor, there are fewer of them because they're using technology to scale their businesses, but they're not matching every single trade the way I was 20 years ago. They're using trading algorithms to enter their interest, and they're adjusting those algorithms. So just like many other industries, the financial markets are being reformed by technology, and in some cases it leads to less jobs in the places where jobs were plentiful before, across trading desks at banks or on the trading floor, and more jobs in technology divisions, and we certainly have scaled out our technology team at the New York Stock Exchange.
Yeah. When we talk about the influx of technology into this space, how are you guys thinking about safety? I think that's one of the things people are deeply concerned about, cybersecurity. How are you thinking about that for the exchange?
I mean, it's critical. It's critical for us. It's critical for our listed companies. So it's something that we are very heavily engaged on. Internally and externally, we work very closely with government organizations as well as our peers and competitors on how to make sure that our markets are secure. I mean, we're obviously a large target since we're the center of the financial capitalism system. And then also employees. One of the highest areas of risk is when employees, even unwittingly, might do something. So we have very robust spear phishing tests that not everyone loves, but you can see the improvement that we've seen throughout an organization as we focused on it.
I want to take a quick break to let the audience know that we will be coming to you guys for questions in just about 3 minutes. I have a couple more questions for Stacey, so if you could start thinking about those questions now, condensing them all the way down, making sure they're questions and not comments, I would super appreciate that. We'll have mic runners in the audience. So I want to go back to something you started the conversation with, which is the purpose of the exchange, right? So it's to help companies go public to raise money. A lot of people have said that the IPO market has been fairly lackluster in recent years. I'm wondering what your opinion on that is.
So twofold. One, the market is better than it was. Mm-hmm. So if you look back in 2018, so far we're having the best IPO market since 2014. So we've already raised in the U.S. IPO market over $52 billion worth of market capitalization across 211 companies, and that's more than was raised in 2017. So 2016 was pretty muted, 2017 better, 2018 outpacing, so we're already on track to have the strongest year since 2014. That said, the number of public companies is down by half over a 20-year period. And so what's happened is there's a lot of regulatory changes that have come about. There's a lot of access to private money that wasn't there before. So companies have choices now. And if you look at the benefits of being public, the U.S. equity markets are unparalleled. There's more liquidity in the U.S. equity public markets than anywhere else in the world. And that provides a lot of value to companies. But there are also obligations once you're a public company that you need to deal with. And that comes down to disclosures that you need to give your shareholders, complying with regulations. Having investors that might have a shorter term view of how you should perform versus a longer term view if you can control your investor base. So what our job is to make sure that those pros and cons are balanced. Because we could focus on the private markets, and I could say, hey, as head of the New York Stock Exchange, I want to expand our private market footprint. But I don't think that's good for investors. Because if companies are waiting to go public and access the public markets and be available to all investors when they're really, really large, the everyday investor is missing out on that growth trajectory. And so I think we need to get our markets and market structure back in balance so that they're not designed just for very large investors and very large public companies, that they meet the needs of small to mid-sized investors and small to mid-sized companies.
Do you think this trend, or do you think that companies not going public when they might have in the past, do you think that's kind of a blip? Do you think it's a current trend, or do you think it's something that's kind of structurally changed in the way businesses work?
I think we have to address some of the reasons why. Otherwise, it could be more of a longer-term trend. I mean, we saw Spotify come to the public markets this year, and They were a really interesting case because they didn't need to raise money. So if you think about the reasons why somebody might decide to become public, it's because they need to raise money, they want the brand and visibility to attract investors by being a public company, or they want the currency to be able to engage in M&A so that they can go buy other companies and grow their business that way, and to provide liquidity to their early investors and employees that have been there. So Spotify didn't need to raise money, and they didn't need brand and visibility. Everybody already knew who they were. But they saw the other values of being a public company. And so they created their own path forward and decided, we're not going to go with a traditional IPO process. We're just going to become public one day. So they worked with the New York Stock Exchange for a year and a half on how they could break the mold on accessing the public markets. And we welcomed them to the exchange earlier this year. And so I think that there is a desire to get into the public markets, but they found a way to focus on one of the detractors there and find a new way around it. And like I said, we've been at this for over 2 centuries. You don't get to do that if you don't change the way you're serving your customers. So whether it's looking at the ETF landscape and having funds that are welcome. I mean, we list 80% of ETF assets under management. We focus on new ways of accessing the public markets with companies like Spotify, or looking at, hey, what does the crypto space deliver, and how do companies might want to use that to raise money? So there are a lot of different ways for us to deliver that value, but it doesn't change our core mission. That's still the same.
Yeah, you've talked about a lot of changes that have happened in the financial industry. The exchange has been around for over 200 years. Do you think the gender dynamics at the exchange and on Wall Street have changed substantially?
Well, it's hard. When you put it into scale, I suppose. No, I certainly can feel the difference, and I think that the environment for women is very different than what it was when I started. I started on the trading floor in the mid-90s, and there were not very many women down there. Now, there still aren't all that many women on the trading floor, but I think that's driven a lot by women not being so interested in working on the trading floor. When you look at financial markets more broadly, or the exchange yourselves, we do have a lot of very senior women in senior executive roles, aside from myself. So I think there is a dynamic in what the environment is like and what's acceptable, how you respect each other, gender aside, just put aside gender. I mean, I think so many of the issues that we struggle with is what is an appropriate way to treat your colleagues? How should you expect to behave as a person, And I think if we can focus on that, a lot of the nonsense should go away.
All right. I want to make sure we get some audience questions in. If we have them, I'm seeing one right over there.
Dave Golish, I'm a private investor. Stacey, I would estimate the stock exchange eliminated 90% of the jobs the last 15 years to automation. Do you feel you have a social responsibility to spend money to create alternative jobs for these people that are displaced by automation?
Yeah, I don't know about that 90% figure, but we have teams that are focusing on different jobs than they were before. And so if you're talking about within the exchange space, we're in new businesses and new functions. Then we've grown our business into other areas, and then we've created jobs in doing that. And so I think that the jobs look different today, and I think that applies across many industries when you're looking at how the functions and designing technology and testing technology. I think those are where we're spending a lot of our energy and resources. Finding jobs for people that are displaced from their existing jobs?
Yeah.
Yeah, I mean, I don't think that's unique to finance. I think as technologies come into any industry, we certainly all have a corporate responsibility to contribute to society, and that's certainly a big focus of ours. But I think that the actual jobs just look a little bit different.
All right. We have another question right there. Thank you.
Okay. Hello, my name is Jim Schmitz. I'm a consultant to trade unions, actually. And one of the developments over the last several years is, especially in manufacturing, the change in the workforce from directly employed employees to the use of independent contractors, what's been called the fissured workplace, where you have basically contracted labor rather than directly employed labor. And a lot of this has to do with the rise of, shareholder. The shareholder, obviously, in a capital market is supreme. The question is there any ability to look at this from a stakeholder standpoint, at least from the perspective of capital markets?
Well, I mean, I think each corporation has a unique perspective. We actually don't use a lot of contract workers. So we used to, and there used to be a lot more of that within the New York Stock Exchange. And we do like to directly employ most of our, almost all of our entire workforce is directly employed. I think that there are, that's certainly been a focus of ours because we believe that they can share in our mission. And our mission is really what's driving us, and it's not just about shareholders, and I think shareholders are an important part of it, but I think when you look at some of the challenges I mentioned for public companies earlier, having a short-term view for shareholders is one of the challenges that companies face. They might have a long-term vision, and part of that long-term vision includes an employee base that's well taken care of and good ESG, and the data shows that companies that have a long-term view and good corporate responsibility have better success. We just need to make sure that the investors are balanced so they're rewarding that behavior for having a long-term view and taking care of their employees.
Everyone, please join me in thanking Stacey.
Thank you.